let's start with the basics. As a rule of thumb, I tell my clients to take the potential full-time employee's salary and times that by 1.25 or up to 1.4% for budgeting purposes. And why is that? Because there are standard costs related to an employee that we must consider outside of the standard salary that you're offering. What are those? So first and foremost, we need to consider self-employment tax. That's the portion in which the employer pays on behalf of the potential employee, which is 7.5% on wages up to $142,800. Additional payroll tax is FUTA, which is federal unemployment tax. And that much less of an expense, but still an expense nonetheless, and that's up to $7,000 per year on your potential full-time employee at 6% that you as the employer pay. Next, we have workers' comp insurance, and this depends on each employee's wages and the services they provide. Think of it like this. If you're hiring a full-time plumber or electrician, those types of services have a lot more risk and potential for injury than your office manager. So the workers' comp insurance rate will be significantly higher. What I recommend is to have your workers' comp insurance agent provide you a list of the rates by profession so that you can accurately budget for the costs related to this particular line item. In California, which ranks 4th in the highest state for workers' comp insurance, the annual premium average is roughly $1,214 per employee. So for budgeting purposes, if again, you want quick math, you want to take that $1,214 as an annual additional cost. Next, we have benefits. These are things like health insurance, life insurance, education reimbursement, and for many of my business clients, they offer potentially 50 to 100% of the health insurance premiums on behalf of their employees. They have retirement contributions, which range from 3 to 5% of a match of what the employee is contributing on an annual basis. These dollars can add up quick, so if you're not considering them, you need to meet with your CFO or accountant to help you identify these additional expenses. Now, let's talk about the hidden costs that most of my business owners don't consider, and even their bookkeeper or accountants don't consider as well. These hidden costs are office space. Now I know with the current environment, many of us are working from home, but eventually we'll get back to some normalcy. So you need to consider what additional resources within your office space that this potential full-time employee will take up. Does he or she need a new computer, a phone line, subscription for software? Let's talk about Microsoft 365. You need to purchase a seat for their emails and their Adobe and all these other additional software costs specific to your industry that do add up as well. So, pro tip from me to you to consider is that you need to sit down and do the numbers so that you're prepared both before you put in that offer letter and for your budgeting purposes for the following year. Thank you for joining in. I hope you found this information very helpful. Subscribe to our channel for more of these financial tips as you business owners are scaling your business. We look forward to hearing from you soon. Like us, share this video if you think I can help someone with this pertinent information, and good luck in the future.